You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook with K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, kicking off our grain conversation with what are futures looking like?
Well, we've continued to move lower on in the futures markets, and I think although we're mainly talking about futures now, I look around when you look around at Kansas basis levels, they're certainly not giving any hidden signals that there's a groundswell of demand welling up out there. The general idea in the markets is that there's not at this point in time a great need for agribusinesses, exporters, you name it, to come buying grain. Because of that, that weakness has come from the cash markets to affect the futures, and uh, so we've dropped down to some levels that if we looked at this over the last 2 or 3 years, we'd be astounded that we'd be here right now. Uh, Yesterday's close on the March contract, 406, down touching on almost at $4. It traded as low as 404 and a quarter. New crop is still at 453 and a quarter. Historically, pretty good price, not too bad a price, but we're basically down and for the corn market when we're given where we're at right now, when we're down close to the $4 level, that's a sign of certainly a buyer's market and not a seller's market. Soybeans have also weakened. The March contract, March 24, closed below 1150, 1147 and three quarters, down 13 cents yesterday. New crop November, 1135. So still, you have the new crop, the ratio of November at 1135 to D's at 453, still showing some advantage to the planting of soybeans in the heart of the U.S. Corn Belt this year. So we'll talk about that in a little bit. And for wheat, we've seen hard red winter wheat close yesterday at 574 in the March contract, July 566. So and that down 2 or 3 cents. So just a very, very weak time in the grain markets. On the future side, we do have the impending rollover from the May contract, excuse me, from the March contract into the May, and in trying to watch where futures positions are. For instance, for the March contract, March corn contract versus May, you've got volume of 274,000 contracts in the March, 556,000 in the May. So some of that rolling has already happened. Still, people will have to get out of that contract, and they had sell positions. They drove it down. Well, they'll have to buy it back. But it looks like in the corn market, some of that's already happened in kind of a surprisingly orderly manner, and it hasn't brought up much in the way of higher prices. And for soybeans, that's the other big one we'd be watching. You've got a similar situation where you got 153, 154,000, 5,000 bushel contracts that are still in what they call open interest, but then 318 or so in the May. That'd be the March contract for May. So we're starting to see the market as we get into the last part of February starting to pardon me, to do this rolling already. And the one that affects us probably very, very directly would be the wheat contract. And really most of that rolling's already happened. The volume is a lot less, 24,500, 5,000 bushel contracts in the March, open interest in March, and already you're looking at to May, 106,000. So almost, well, four times, almost four times as many contracts that apparently have gotten out of the March contract already into the May. So uh, it it wasn't but a week or so ago when you hadn't seen that much rolling, and I guess for this old cash market oriented Kansas State guy, I'm surprised. I'm somewhat surprised that we had that much rollover, that much turning, people getting out of the short positions, buying back longs, and yet the futures are still sideways to lower. So it just is what it is.
And Dan, recently, last week we talked that you were in DC, and so I've had a little bit more time to develop that information and another day of knowledge from the Ag Outlook conference, and a few things you wanted to share with us from that.
Three things. First of all, probably the most important info coming out of this probably their estimate of where acres are going to go, and we'll have on going forward. We'll have on March 8th the next WASDE report. We'll find out largely about South America on that, but then on March 28th we have the prospective plannings report. So those numbers will be compared directly against what the USDA said last week in their outlook conference. So we got that. We also have the balance sheets. They came out with balance sheets for the major crops for what interests us in Kansas: corns, grain, sorghum, soybeans, and wheat. And take a quick look at that, and uh, and then their price numbers also. So first of all, for corn, well, pardon me. First of all, for acres, the USDA basically looked at the soybean to corn new crop price ratio, and in essence said that projected that we'd be down 3.6 or so million acres for corn, down to 91, and up 3.7 million acres for soybeans, up to 87.5. Sorghum sideways to slightly lower, down about 200,000 acres. Wheat, all wheat, not just hard red, down about 2.6 million acres. Again, 5, 6, 7%, something like that. Cotton actually up, so that might affect us in Kansas. And rice unchanged. We don't grow a lot of rice here in Kansas, but still it has an impact in different places. So uh, we'll we'll be looking at those numbers. That those are now the standard for comparison in the market when we come into that uh, March 28th report. Uh, Last year, I just remember the big surprises we had when we went not from the March to the June 30th report, and the USDA's almost completely reversed course, and then uh, drop, excuse me, raise their corn acres, drop their soybean acres, and and I know what the soybean to corn price ratio as an indicator of relative profitability stands for. Understand it, got it. But there's also the issue of what farmers are best at. What's their comparative advantage? And we're pretty strong at growing corn too. So that'll be a big issue. The balance sheets, these balance sheets, in essence, for corn, they projected 181 bushels per acre. The record we've ever had was last year's 2023 crop and 177.3. So that's a long-term beeline trend, and so I take that number and it comes in at 15, little over 15 billion. If you plug in this year's record, 177.3, this is the U.S. average yield, you end up at about 14.8. 14.6 or 7 billion bushels, and you end up and whittle ending stocks down from the USDA's projection with 181 uh, down to their projected ending stocks at about 2.5 billion bushels. If you go with the other record here, 177, you're you're down about 2.1. This is about where we're at this year. Their of course stocks to use are way high in those scenarios. The corn price this year still projected at 480. They project next year's corn price at 440. So all those are pretty sobering numbers for U.S. corn producers. The other side of that would be for soybeans. USDA projected another near record soybean yield as well of 52. 52 bushels per acre, 4.5 billion bushels of production, record high as I understand it, and ending stocks growing from 315 this year, which are already somewhat burdensome. We see it by the prices, to a high of up to 435. Stocks to use close to 10. And probably the most noteworthy issue on that is that if this year's market price projected about 12.65, they're looking at fully $1.45 lower for next year, down to 11.20. So you got that, and then just would mention for wheat also, U.S. wheat numbers with in essence up to 49, just under 50 bushels per acre yield, and weak exports continuing, 775 million bushels. And again, historically, when we've been good at exports, 1.1, 1.2, well, we're just declining, and because of lack of export competitiveness, and that's a nice word for saying, gosh, Russia is selling a lot of wheat and Ukraine isn't falling down. So the flooding flooding that world market with low cost wheat, and it's affected what our price prospects are. So projection for U.S. wheat prices of $6 a bushel. We were at 7.20 this year, and given what's happened, absent a drought or geopolitical disruption over there in the Black Sea region that would stop shipments, it just seems that as long as low cost, very competitive wheat keeps coming out of that part of the world, the U.S. is kind of a supplier of last resort. And for sorghum, uh, I do have a quibble, a qualm, a disagreement with the USDA on sorghum. They basically raised the export number for sorghum from 240 million up to 295 million. Stocks about the same, but then dropped the price from 485 to 440. My thought is, if we really have that great of a year in terms of sorghum exports, are we going to be dropping down to 440? Because in my view, when you've got that happening for sorghum, it doesn't completely separate itself from corn, but starts to operate more independently. So anyway, those are my thoughts on it. That the prices sure are sobering because they're all lower, and I don't doubt as producers, as lenders, other people in the ag industry look at that, they are wondering about the how that'll affect financial returns, and I guess if we have lots of bushels at those prices, that's one thing. If we don't, if we just have so crops at low prices, then that's a tougher pill to swallow and survive.
Dan, as we round out today's conversation, then wanting to think that these prices are still speculation and we'll have to wait and see what we're actually going to get when it comes to planting and harvest.
Yes, we're in February. February so often in past years has been a very non-volatile, almost a time of grain markets just being in the doldrums. And there's other more colorful words you could come up with to describe them. But seasonally, we're almost to March 1. For wheat, we'll break dormancy if we haven't already, and some getting pretty near that with the temperatures we've been having out in western Kansas anyway. So we'll start to have more U.S. domestic production issues to deal with. As we speak, the USDA equivalent down in Brazil and also in Argentina have been talking about weather issues of late, even in Argentina cutting back their numbers. So the USDA's approach to dealing with Brazil is, pardon me, the South American crops is definitely Missouri-ish. Show me, that they're not making any cutbacks of major consequence until they have the proof, and that proof will be just around the corner, one way or the other. So I really look forward to seeing what the next 30 to 60 days do in terms of market information, how the USDA will handle that in the March and April reports, and what that, and you add that to our own domestic uncertainty and getting crops planted, whatever weather vagaries happen. I just think we're in for a time of more volatility and probably a little bit stronger prices than we have now. And the last factor is farmers at these low prices aren't selling unless they absolutely have to. So they're withholding sales from the market, and eventually that will bring buyers to the table, and we'll see what that does as we head off into March, April, and May.
Dan, I appreciate you taking the time to join us once again and give us our grain market update.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.